Hello, welcome back to Core Finance. I'm Matt Brown. I am joined by Shaun Richards, who is from Not a Yes Man Economics. And today we're going to be talking about unsecured credit. I actually read an article this morning. A lot of charities are saying credit cards are pushing up limits without the knowledge of the owners of credit card debt, and they're saying, therefore, a lot of vulnerable debtors are getting more and more into debt. So unsecured credit or debt in this country, is it a problem?
Yes, I think that it is. I read that too, and I've been on the lookout for that sort of thing, because I've been arguing for quite a while that one of the problems of the Bank of England opening the monetary taps last August, so just over a year ago now, was the fact that if you send out banks to lend, invariably they don't lend where you want them to. The dream ticket, which the Bank of England has been trying to push for the last 4 years now, is for more business lending to smaller businesses. Well, to deal with that, immediately today's figures showed yet another fall. That was, I think, smaller and medium business lending was down 200 million in July. Now, where this sort of flicks over is, whilst after all this time, then it looked like maybe they got some growth, albeit not very much. We still keep getting the occasional month where it goes down. And this is somewhere where they claim they wanted it to go. We've seen a spell of mortgage lending, again, looking back to 2013. But now, over the last 12, 18 months or so, we've seen unsecured credit going away. And there are other flickers of issues about, like, for instance, issues with car finance, that being car manufacturers. I'll return to that in a minute because there were some interesting numbers there. But this morning, again, we see annual rate of growth unsecured credit, 9.8%. This is between the two of personal loans and credit cards, mostly the components of that. And it does pose a question, and the Citizens' Advice report, that in essence, when people sort of move towards their credit limit, there isn't really any way of sort of them going to say, can you pay this? Now, there are a couple of horrific examples. I don't know the circumstances, and people have to some extent be responsible for what they do, but it seems like the banks are just, do you want some more? Oh, here it is. And of course, that's a road to nowhere. So there are a lot of issues rumbling round on this. If we now move back to the Bank of England, if we look back to last August, well, really, it kind of wanted this sort of thing. Now it's saying its buzzword is vigilant, it's on the case, it's going to do this. The Financial Conduct Authority has proposals. They always have proposals when it's too late. By the time they apply them, everything might be different. So it is, for the UK economy right now, a genuine worry. Rate of growth, change. And if we just simply compare the numbers, so today's number, a lot of places are claiming it's better, well, okay, slightly, 9.8%. But economic growth's 1.7%. Real wage growth, depending how you count it, is negative, either very slightly or a little bit. So where's the basis for this? And that's the problem.
I mean, the moral issues to one side. I mean, also, the Bank of England, or say the FCA, if they start imposing restrictions on these loans and maybe start calling in the loans. I mean, we've almost got a subprime mortgage issue that we saw in the US. I mean, the problem is when you start calling in these loans and they're unsecured, does that then cause a bigger problem for the Bank of England, because that effectively is a credit bubble? And it's a disaster waiting to happen.
We could, for a group of people, create a credit crunch.
Yeah.
But, you know, if their limit was £7,000, just to say, then you reduce that to 6 or 5, then they'll be crunched right back, won't they? So that's what you could create. Having then the unfair side of that, of course, is that it was fed in the first place. But anyway, you then bring that back. And so for particular groups, this poses a few problems. Would they? I don't know. Some people then choose to go bankrupt. That's the sort of thing that could spiral out and create quite a bit of trouble. And if we look at the two things, also there is something, to my mind, familiar here, that there are presumably at least some rules for personal loans. And I think it's noticeable that credit cards, where it doesn't appear there are many at all, the lending slips to that. That's always the way these things are started.
Store cards as well. I assume they're still quite easy to get hold of.
Well,
and that
yes.
seems to be, you know, a key area that people are finding. You know, they're barely managing the jams, or just about managing, as I should say, are now focusing on avenues that.
It is a danger sign. The argument is that
extortionate.
You know, because real wages aren't keeping pace with things and people are borrowing. If we skip to the United States, there isn't great evidence of that here, But people may have seen in the news images of places like Ford actively looking for subprime credit people to give car loans to. And so this is a whole sort of atmosphere coming together. Now, if we move on to something else, so this is quite different, because whilst it might signify some of this, could be finally a really positive sign. Actually, in the numbers today, and this is for larger companies, showed a lot of borrowing by manufacturers.
Yes, an increase. More than expected as well.
Well, it's quite large. Now, I did look back, just in case, because of the Brexit EU vote last year. There were some quirks in the numbers, just to look as if... And last July seemed quite steady, nothing stellar, so it wasn't an annual comparison drop in and out. Quite a surge. Now, we've seen in other places things like the CBI report, really good export numbers, but it hasn't come into the official data. Well, this is the first possible link that we've had, and what I'm suggesting here, and this is opinion, not fact, that perhaps we're seeing a sort of J-curve effect where manufacturers are finally seeing the benefit of the lower pound, and are then borrowing to ramp production up. Now, I'm making a few assumptions there, but it could be a hopeful sign. People are saying this is happening. The official data hasn't picked it up. Maybe this is the first sort of flicker of a hint that we are, which if it would be good news.
And inversely, could it be also argued they're borrowing more to make up for the margins they're losing on the fall in the pound?
If you really wanted to go deep and have a pessimistic view, it could be car manufacturers borrowing to cover on their car finance side. That would be a lot less hopeful. But if we stick to the positive thing, I think that there is some hope that the numbers here are reflecting that manufacturers are going to kick it on, and we'll find out in the next few months.
Fantastic. Well, hopefully we've got some positive news to come for UK PLC. Shaun of Not a Yes Man Economics, thanks very much for joining us.
Thank you.